Catherine, you wrote a deep dive report on China's consumption outlook. Importantly, what's your forecast for retail sales growth? Will this meet investor expectations?
Right. We've modeled 4.1% China retail sales growth for 2025, and that's below the latest consensus numbers of 4.6. Now, at the point of time of the report itself, it was actually up to 4.9. So we've actually seen the consensus expectations coming down. But that said, based on what we see and what we have actually observed from the ground right now, China's going to struggle to actually meet consensus expectations. We are now looking at under 3% for the second half for it to actually try to get to where market is expecting. And that's going to be a tough one because, we've seen the fading stimulus, impulse buying in the recent months. And really, we will need to observe how new measures such as consumption loans, the boost to income from service sector business loans will help stimulate consumption and spending into the rest of 2025.
Catherine, how important are these government stimulus measures or these subsidy programs to get Chinese consumers to spend?
Right, John, they remain still very critical. And again, the key is that it's not going to be sufficient. So we have already dispersed, or China has already dispersed half of the special bonds that they have raised, and there was a good chunk that came out in July. We're now looking at about 69 billion for the remaining of 2025. But yet, new personal loan subsidies will only start in September, and we will really have to see how that is going to help very cautious household spend more, and particularly culturally here in Asia and China, we generally don't spend or rather go into debt to buy a smartphone, for instance, or get that extra washing machine. So from our standpoint and from my standpoint really is that the service sector business loans, that's where the upside and the punch can come in for incomes. And if the incomes outlook actually do improve for those who are being employed in some of these service sector loans, and here we are talking about service sectors pertaining to education, elderly care, tourism in particular, we may be able to actually see that uplift in spending into 2026.
Are we seeing Chinese consumers start to trade down in terms of their spending habits?
What we have observed so far is that it is not a uniform trade down. How I'll really describe this, John, is that it's like a barbell. We see value seeking consumers taking on the subsidies, and ASPs for appliance, for instance, as a result of these subsidies are way below earlier year levels. We are seeing, Lululemon deepening markdowns, but yet there are selective premiumization where if you are able to actually communicate the functionality, the performance and the value proposition, and here we're really talking about the functional value of your products itself, you will see Dissenter, Arthrex, and Solomon, expensive shoes that are priced at a premium above Nike, still growing and doing very well in China. And I'm just gonna, take a hit at gold. We are also seeing gold jewelry, doing very well in China. Lao Pu Gold has been expanding their presence, you're again really through their proposition and a scarcity sales tactic that differs from Chow Tai Fook. Overall, I would just summarize that I would say consumers are more discerning, prioritizing affordable premium and functional value. So that's the trend that we're currently seeing right now.
Catherine, you mentioned a few segments, including gold. Are there any other areas of the consumer or retail space that's seeing growth?
Right. In the last 1 month, we've actually seen policies coming out from Beijing supporting sports, investing and encouraging local governments to invest more and spend more on sports facilities, and even offering subsidized loans to those who are engaged in outdoor or related activities. So that is still a sector that I think you will definitely see the structural uptick in demand within China. So, functional footwear, functional outdoor apparels, they will definitely carry the momentum into 2026, in my opinion. Now, inbound tourism is also one that we should, pay attention to. This is going to benefit a lot of the local jewelers, which actually comes with unique Chinese elements. Even I would say, Labubu, we all know where that originated from, and there's still a lot of, independent and new IPs coming on the mainland to actually support pop mart sales. Last but not the least, I'm sure we are all users, one way or another, of the electronics by the Chinese makers, including Xiaomi. So these are sectors as well as brands that can actually benefit from inbound tourism coming in. Again, I'll reiterate, for inbound tourism, we've actually seen China easing visa requirements for many countries, and more are in the pipeline based on our observations. Last but not the least, we should definitely participate, you know, into the digital platforms and the online services rivalry that's going on. Essentially, you are getting subsidized bubble teas, services, very speedy demand deliveries at a fraction of the price. And this is really efforts being made by companies like Alibaba, JD, and Meituan to stimulate the market consumption appetite as they continue to expand their reach, and diluting somewhat the differentiation between e-commerce or just food delivery. In fact, all of them are trying to be the go-to digital platform for Chinese consumer, and that's where consumers can stand to actually benefit from this ongoing rivalry.
Catherine, thank you for your insights.